solid opening for the market, about 70 points higher for the Nifty.
Benchmark indices are up close to about 0.5% in the last 30 minutes. We've come off a tad bit from the high.
We did see some fall from the highs, but still, it is managing to be in the green with decent gains right now.
Another positive session for our markets, the 7th one in a row. The Nifty right now, as we speak, is exactly at that 17,700 mark. It's come off from the highs of about 17,750 that it hit. All in all, another good session, right? Markets are slowly creeping higher and higher. And now 17,700 seems to be conquered.
Well, what a day it was for trade. We started off fairly well. Then we saw some sort of congestion above that 17,700 mark for the Nifty, only to find some more strength in the market and conquering that 17,700 mark by the end of trade. The Nifty ending closer with a century higher, and the Nifty Bank was the one which was the star batsman, up 500 points or almost 1.5%. You're watching us here on Markets Today, a show where we track 6 hours of trade in 5 headlines. I'm Mangalam Malu. Let's talk about those 5 headlines then. Stock markets rose for the 7th straight session to end at a 1-month high. The Sensex gained over 300 points, the Nifty nearly 100 points, led by the financials, and the Nifty Bank up 1.5%. Expectations of a higher weight in the MSCI index owing to increased foreign investment room propels Kotak Mahindra's stock. IIFL says an increased weightage can lead to an inflow of $750 million. Bank of Baroda gained 3% on the back of strong advance growth and deposits growth as well for the fourth quarter, echoing the performance of its peers. The news powered up the rest of the banking pack as well. Analysts, however, advise against exuberance. And in stocks making news today, Shilpa Medicare jumped on getting a US FDA nod for its psoriatic arthritis drug, while a technology license pact with Mitsubishi for electrolyzers lifts Neogen Chemicals. The Indian Met Department predicts a normal monsoon this year, contradicting SkyMet's prediction of a below-normal monsoon. Both forecasters agree El Nino-like conditions are likely, but the government believes it will not have any adverse impact on this monsoon. And here's the lineup of what we have in the show for you. We'll bring you the biggest market opinions coming in from Gautam Duggad of Motilal Oswal Financial Services, Arvind Sanger of Geosphere Capital Management, and in corporate voices as well, we have Harin Karani, who's the MD of Neogen Chemicals, which was the stock of the day, up 15% after a big move yesterday too. But before all of that, let's take a look at the day's market action. Stocks on the Lal Street gained for the 7th straight session for them to end at the highest level that we've seen in a month. The Nifty and the Sensex gained 0.5% each. The financials led the rally, and then we saw a big move come by the Nifty Bank, which was up over 500 points. Surabhi Upadhyay joins in with the details of the day's trading action.
Well, it was the 7th straight day of gains on the street today, with the Nifty cruising above the 17,700 mark. Pretty interesting, and lots of power coming in from bank stocks today. That's where the surge came in from. But the Bank Nifty almost up 1.5%. A lot of the big names like an Axis Bank, ICICI Bank, SBI, all leading from the front. We've actually got some very robust business updates from most lenders, whether it is banks or NBFCs, and that really aided sentiment in this part of the market. For Kotak Mahindra Bank, there was an added fillip. There's expectation that its weight will go up in the MSCI indices when the index review happens in May. That could lead to an inflow of over $700 million. That was the expectation during the rounds, and that stock was a star performer on the Nifty with a 5% up move. Autos did pretty well as well, because we had the monsoon update come in, and it seems that maybe the monsoon won't be as bad as previously feared. That worked very well for stocks like Bajaj Auto, 52-week high on that stock today, Eicher Motors, Maruti, M&M. The entire auto pack was pretty nicely revved up, if I could say. The only sort of sore spot in the market today was IT. The nervousness is really palpable on the street ahead of earnings. TCS reports tomorrow. That stock was down. So was Infosys, Wipro, HCL Tech. Your entire frontline IT pack was reeling under pressure. The market is at a very interesting juncture now. The Nifty is now running into a very critical congestion zone around the 17,750 to 800 level, 17,800, and it'll be very important for it to take out this level if the uptrend is to remain intact. Similarly, the Bank Nifty is looking at a pretty critical level around the 41,730 level. That's where the 100 DMA, daily moving average, comes in. So some of these levels and technicals become very important after the market has seen a pretty strong winning streak over the last few days.
A big winning streak indeed, and powered by a move across all sectors. Let's get some market opinion in then. Gautam Dugar of Motilal Oswal Financial Services says that the Nifty's EPS growth in FY23 wasn't that bad despite steep hikes in interest rates. Whereas Arvind Sanger of Geosphere Capital Management believes that rising rates impacted fund flows into India. But remember, over the last 7 trading sessions, the FIs have been buying in the cash market.
The beginning of FY23, our EPS estimate for FY23 was 850 rupees. So over the last 12 months, it has come down by about 4 to 4.5%. Now, despite that, we are still about to end the year at about 13 to 14% growth, which, as I said, on a base of 35% growth in FY22, I'll still consider it as a very healthy sort of a growth, because back in April 2022, we did not anticipate a 300 basis point or 275 basis point kind of an interest rate increase. Or maybe, sorry, I stand corrected. It's about somewhere about 250 basis point of a repo rate hike. So given the way things have moved in the last 12 months, I would reckon this 13-14% growth in Nifty is still very, very healthy.
The headwind of rising rates was causing, fund flows to be negative. But India's own earnings growth and economic growth is not on the same shaky wicket that the U.S. economy is. So I think in that sense, that would be a positive for Indian equities. I think that overall, this quarter should show that earnings strength in Indian, corporate India is very much on track. And if that continues to be the case, then I think, whether it's the financials, which are the lead sector, or it is important domestic-facing sectors, I think they should start to become clear that the earnings story is very much on track.
All right, with that, let's move on to the second headline now. Expectations of a higher weight in the MSCI index owing to increased foreign investment room has propelled Kotak Mahindra stock 5% higher. In fact, that stock was pretty much the stock of the day, led the Nifty bank higher, which in turn supported the Nifty itself, the top gainer on the index as well. IIFL said that an increased weightage of foreign investment limit could actually lead to an inflow of up to $750 million. What does this mean and how is this calculated? Vivek joins in with all the details of why the stock moved so much today. Vivek.
Well, absolutely. So, the latest shareholding pattern update is what is getting the street excited. So, foreign headroom availability of over 25% actually implies that there is now a likelihood that MSCI will take this into account and thereby increase the weightage that the Kotak Mahindra Bank has in the MSCI Global Standard Index, the main index, and almost double it from the current factor that it has. Currently, Kotak Mahindra Bank has 0.5 times factor as far as the Global Standard Index is concerned. If this particular factor is increased to 1, which is what analysts are anticipating post the shareholding pattern update, you will actually see inflows of close to $750 million. Now, this is an estimation as for what IIFL has. Now, also, what you have to take into account is the fact that MSCI will have to have, number one, except that the foreign FPI headroom has gone above the 25% limit, and number two, whether Kotak Mahindra Bank has gone ahead and updated the shareholding pattern in time. It does appear as though both of these criteria are met at this point of time, which is why in the May index review, to expect to see the weightage of Kotak increase in the MSCI Standard Index, and one-time inflow of close to $750 million is how MSCI is likely to go ahead and implement this particular weight increase.
All right, we understand that, Vivek. Thank you so much for explaining. In fact, on that note, let's also speak about, IIFL Securities' understanding of what this could mean for inflows into Kotak Mahindra Bank. In fact, the expert spoke with us and said $750 million is the kind of flows that we could expect.
If one dwells into the MSCI methodology framework, for the stocks that are part of the index, if the room opens about 25%, there is an upward revision in the adjustment factor. So Kotak should see its adjustment factor getting revised upwards from half to 1. So this should translate into an inflow event for Kotak Mahindra Bank in the May 23 QCIR. We extrapolate inflows to the tune of $750 to $800 million, which is almost 7.5 to 8 days ADV.
Right, to the third headline of the day, and it was a PSU bank again. We had Bank of Baroda gaining almost 3% of the bank, of a strong growth coming by in their advances and deposits for the fourth quarter, echoing the performance of all its peers. Abhishek Kothari joins in with the details of the fourth quarter update. Abhishek.
Well, it's for the first time that Bank of Baroda has given an operational update in terms of the business parameters. So amazing business momentum continues for second quarter in a row like we saw in Q3. So Q4, the deposits are up 15% YOY and about 4.7% sequentially. The domestic deposits are up 13% YOY and about 4.3% sequentially. International deposit momentum was robust at more than 31% YOY and more than 7% sequentially. The domestic CASA ratio has improved on a sequential basis. Loan growth pretty strong, coming in at 19% YOY and about 5.4% sequentially, while domestic loan growth is nearly about 17% YOY and about 5.2% sequentially. So the international advances, that momentum has been robust at 30% YOY and about 6.5% sequentially. In the domestic loan growth, they saw retail loan growth being at 27% YOY and about close to 7% sequentially. So you saw the global CD ratio or credit deposit ratio improve both YOY and net sequentially. So the net interest margin can remain stable or improve on a YOY and quarter-on-quarter basis. Back to you.
Abhishek, thanks a lot for that. In fact, the US banking crisis is far from over. That's the word coming in from noted economist, also known as Dr. Doom, Nouriel Roubini. He spoke exclusively to CNBC-TV18's Lata Venkatesh this morning and said that he expects more trouble for the financial institutions in the US. Also believes that India, along with a few other emerging markets, will actually be a safe bet for investors to park their investments, and that comes as a bit of a relief.
I don't think it's over. I think there'll be more financial institutions going to be in trouble. And recently, the problems of the banks have come from what is referred to as market or duration risk, meaning having long-term securities whose value is falling as interest rates are going higher. But we're going to go from market risk to credit risk, because now there is a beginning of a credit crunch in the banking system, especially the regional banks that lend money to households. Suppose that the new normal is 6% inflation, then 10-year treasury yields, they'll have to go eventually to 8%, 6% for inflation, and 2% real. Now they're at 3.5%. If they go from 3.5% to 8%, you have another 50% losses on what is supposed to be a safe, secure, and defensive assets. Trillions of dollars of dollar treasuries or EM debt linked to the dollar, or of high yield and high grade bonds. So the risk of significant losses, both in bond markets and even in credit markets, are significant. Structural factors for India go in the favor of India. Potential growth around 7%, maybe higher with more economic reform, a young and growing population, a catch-up of per capita income because it's much lower than China. So India is going to be a rising power in the next few years and decades with additional economic reforms. So certainly India and a few other emerging markets might be a good place to invest, both for fixed income and even in the equity markets.
All right, so that's some commentary coming in on the markets, the way the world is likely to be from the man himself, Nouriel Roubini. What we'll do is take a short break, come back, discuss more about the markets, all the other news that made headlines today after this short break. Welcome back. You're still with us on markets today. What a day it was. 100-point gain on the Nifty, 500 points gain on the Nifty Bank. And we've spoken about a lot of the factors that moved today, but let's talk about a lot of the other stocks that made headlines as well. And one of them was, Shilpa Medicare, which surged 16% today after the US FDA nod that the company got for its psoriatic arthritis drug. Ekta joins in with the details of that one. Ekta.
Thanks for that. Well, yes, Shilpa Medicare is in focus. It's up around 9% That's because they've received the final US FDA nod for apremilast tablets, which is basically a drug which is used for the treatment of active psoriatic arthritis. Now, the product is executed from a contract manufacturing site The market size of the drug is around $3.55 billion. Now, why is this positive? Is because remember that one of the company's main units for formulations, which is basically their Jadcherla unit, was issued an import alert by the US FDA in 2021. The company had indicated they have finished remediation. They are awaiting a US FDA inspection, but they had indicated that there would be some amount of site transfers which would take place. Overall, this would also add to their complex product pipeline, which they are focusing on, which basically includes oncology as well as transdermals. Remember, they have a very strong focus in terms of oncology, and they are making headways in terms of other markets when they are launching complex products, if it isn't the US market. So this should be assumed to be a positive, that they are managing to launch a drug in the US market despite one of their sites being under import alert since 2021. Like you mentioned, the stock has been an underperformer. It's down 49% from its 52-week high and is just about 15% away from its 52-week low.
All right, Ekta, thanks a lot for that. An erstwhile underperformer, a sliver of good news, and there were a bunch of positions taken on that stock, up 15% today. But let's stick with stocks in the news itself, and big movers at that. Technology license pack coming in with Mitsubishi for electrolytes helped Neogen Chemicals clock 15% gains as well. And this, remember, over and above the gains that it got yesterday after the company announced that a possibility is of such a tie-up is likely, and that there would be a press conference to speak about the same. Sonal Bhutra now joins in with more on the deal and what that means for the company.
Thank you so much for that. Well, Neogen Chemicals is in focus because they have signed a licensing agreement. It is with MU Ionic Solutions, which is a Japanese company. And this is basically for the technology license for manufacturing electrolytes, which is ultimately used for batteries in EVs as well. Now, Neogen will get this license for proprietary and confidential manufacturing technology. They have planned a manufacturing capacity of 30,000 metric tons per annum here. And these electrolytes will be targeted by Neogen to meet the growing demand of lithium-ion cells manufacturing in India, which are ultimately used in electric vehicles. Also, this will be the first company which will get this technology from a foreign player here, and they also plan to start commercial production by 2025 itself. I spoke to the management earlier, and they sounded very confident on this particular foray that they have made. They say that this license is perpetual till the time they are making this production of 30,000 tons per annum. And if they want to increase this capacity, then they will have to increase that fee as well. It is a one-time fee which will have to be paid if they achieve certain milestones in production as well. Apart from that, they said that if there is a change in technology as well, they might have to pay a higher fee here. But there is no royalty, so to say, because it's a manufacturing technology agreement for the company. They say they will be doing a capex of 450 crore rupees, which they had earlier aligned. It was both for electrolytes and electrolyte salts as well. So they still have to figure out how they will spend it on electrolytes. So that is a number that we still have to get from the company. They say they target to complete this project by calendar year 2025 or financial year 2026. They had a guidance of 1,100 to 1,200 crores of revenues by FY26. With this new project coming up, they say they will be able to exceed that guidance, but final number is something they're still not very sure of. But yes, it's a step in the right direction and positive for the company as well.
The license is basically perpetual. That means once up to 30,000 metric tons per annum production. So till the time the plant is making 30,000 metric tons per annum, we don't have to pay any additional license fee. So it's a one-time license fee, which we'll have to pay in certain installments as subject to some subject to achieving some landmarks between the period when the plant is getting constructed over a period of next 2 years. But after once it's paid, then this will be for perpetuity. And if we want any additional capacity increase, then we'll have to pay. Or if there is any technology upgrade from their side, we'll have to pay for that. The royalty is not to be paid because this is mostly a manufacturing agreement.
All right, so those are a bunch of stocks that did extremely well today. In fact, 2 out of 3 stocks ended on the gaining side in today's trading session. Let's talk about the ones that did not do well, and one of them was ABB, among the top F&O losers today. And this after Kotak Institutional Equities actually downgraded the stock for multiple reasons. Vivek joins in with those reasons and the rationale, and perhaps the reason why the stock underperformed today. Vivek.
Well, absolutely right. ABB India, one of the top laggards in today's trading session. Now, what's actually happened is Kotak Institutional Equities has gone ahead and looked at the annual report of the company. And number one, they take into account the sharp run-up the stock has seen. Also having a look at the high valuations at which post the recent run-up, the stock is trading at. So this is number one, prompted them to go ahead and downgrade the stock to a reduce from the buy stance that it had earlier. Also, what they're saying is that at this point of time, at the valuations at which it is trading, they are finding it quite hard to justify the sustainability that the company saw in 2022. Number one, of the sharp improvement in the margins and also the working capital improvement that the company saw in FY 2022. Also, what they're saying is that the company enjoyed a 37% post-tax ROIC, that is a return on invested capital, in 2022. And they believe for the company to replicate this going forward is going to be very tough, and hence the downgrade. And today we are seeing clear selling pressure in ABB.
Clear selling pressure indeed, Vivek, down about 3.5%, but no pressure as far as the monsoons are concerned. And that's our fifth big headline for the day. All eyes rather on this year's monsoons. The Met Department has predicted a normal monsoon this year, and this is in divergence with what SkyMet did yesterday. SkyMet predicted a below normal monsoon. According to Met officials, rains during the June to September period is expected to be about 96% of the long-term average, which puts it in the normal bracket, as against SkyMet, which says 94%, which puts it slightly below average. Further, Met officials also said that El Nino conditions are likely to develop in the second half, and that's pretty much in line with what everyone has predicted, including the likes of SkyMet. So let's hear out a conversation with the Met officials that our colleagues had.
Most of the what is called central India, it will be a good monsoon, whereas in the west coast, in South India will be better monsoon, and maybe in the west coast some portion it will be less.
So we saw February temperatures rising, and you also expect in the coming months the temperatures to be higher than normal. What is the kind of impact that you are assessing?
See, basically the temperature is not the only criteria to be comfortable and other thing. The temperature will be every year, it will be increasing. There is no problem. But we have to see about how the humidity is going to change. So that is what humidity plus temperature comfort factor will be there. Yeah, monsoon is normal, so it is a good news. So we need to much worry about it.
Worry about that, and that certainly brings a heave sigh of relief to everyone who's watching the markets, but more importantly, the agricultural community and the nation's economy itself. The Indian Met Department predicted a normal monsoon. However, private weather forecaster SkyMet predicted the upcoming monsoon will be below normal. What does this mean? And how does the entire thing stack up? We have Manisha Gupta joining in with more on the differing forecasts.
Well, thank you for that. Well, yes, contrasting forecasts from the government and SkyMet, but they do agree on few things as well. Firstly, Met Department is predicting rainfall to be 96% of the LPA. SkyMet has a forecast of 94%. So anything between 96 to 104% is considered normal rainfall. So even the government's forecast is at the lower end of what is considered normal rainfall.
We come out with the statistics, and result is about 96% of 87 centimeter will be there. Roughly about 83.5 centimeter rainfall will occur during June to September.
We expect that monsoon will be 94% of long period average, that is 8.6 mm. And El Nino will be evolving, and it will be much stronger in second half of monsoon.
So if the government's prediction comes true, this will be the fifth consecutive year of normal monsoon. It was in 2018 when India saw deficient rainfall at just about 91% of the LPA. However, there are several key factors that can have an impact. Both government and SkyMet agree that El Nino-like conditions are likely. Government believes that El Nino is likely in the second half of the year, and it will not have an adverse impact on the rainfall. Actually, from 1951 to 2022, the El Nino phenomenon was observed in 15 years. And out of these 15 years, we have had normal rainfall in 6 years. So an El Nino does not necessarily mean a deficient rainfall. Another point to note is the spatial distribution of rainfall. For example, last year we saw monsoon at 106%. It was above normal. The month of July in last year saw the highest rainfall in nearly 17 years. But despite this, rainfall in India's eastern and northeastern regions was 12% below normal. In UP and Bihar, it was 30% below normal. And let me conclude by explaining why rainfall is so significant to India. The kharif crops like rice, cotton, maize, soybean, corn and many more are heavily reliant on monsoon. In fact, kharif crops account for nearly half of India's agri-basket. So normal monsoon is absolutely essential for the agri-sector and economy at large.
If you see the overall figures which are released by IMD at the end of the monsoon season, somebody can say that these 4 years have been very good, and at the all India level, the behavior of monsoon has been as predicted and in the normal range. However, as we saw last year and also in previous years, the monsoon predictability has been quite awkward, and in certain states there has been a lot of deficiency. For example, in UP, Bihar, West Bengal, etc., it was 25 to 30% deficient last year.
All right, with that, we wrap up on this edition of Markets Today. Thank you so much for watching. See you tomorrow.